Good afternoon, and thank you, everyone. My presentation is fairly short and straightforward. Uh, since the first speaker we had out here spoke about the economy, the second one spoke about business transformation, the third one spoke about his success story, which was quite an inspiring one, and more recently we heard about venture capital out here. Uh, I am a debt market guy. I started my career in investment banking in the US, moved back to India a decade ago, was focused on corporate banking, corporate finance, structured finance primarily. And a few years ago, dawned upon this problem statement, which is pertaining to supply chain finance for the MSMEs, pretty much the vendor suppliers of large corporates, dealer distributors of these corporates who are facing a cash crunch or were facing a cash crunch. At least that was what we saw at the time 3 years ago. More recently, this has been augmented in the economic stagnation that we are currently witnessing. The solution that we came up was an entire end-to-end digital solution for providing working capital access to these MSMEs, suppliers, dealer, distributors, through the entire process by plugging onto one simple system, which is a digital solution. And that's where Canopi really started. Canopi is basically a simple app where an MSME dealer or an MSME vendor who is catering to a mid-size or a large corporate, they just download a simple app, give us basic information. We try to provide them collateral-free loans. The reason why this is important is because the MSME segment typically has always had to put up collateral. They've always had to pay higher rates of interest. They've always had to give these extended credit terms to their corporates whom they're supplying to. And this results in a huge working capital gap for them. Our objective was very simple. How do we streamline this entire process? How do we make it collateral-free? How do we make the rates of interest competitive? Because a lot of these large corporates borrow at single-digit rates of interest. They typically don't put up collateral. And they have access to pretty much virtually unlimited capital. And this is why you hear about the lakhs of crores that are lent out in the market today. We wanted to bring that down to the MSME as well. And that's where this digital solution really came up. On the one hand, you can only access so many banks, your local banks and your cooperatives or your NBFCs who are catering to your debt requirements. On the other hand, if you take unsecured business loans, they're quite expensive, typically in late teens. We developed a process wherein we would analyze your business, your receivable cycle, make it about a cash flow and funding mechanism, wherein we don't take collateral from you, we give you early teen rates of interest, get you funded from multiple lenders, but at a cash flow level, at an invoice level. And that's the whole genesis of Canopi. On the other hand, in order to cater to our banking requirements or our NBFC requirements, we started translating this entire data set. You have your GSTRs, you have your e-waybill movements, you have various other variables which bank analyzes. And using that data, we catered the appraisal memos to our banks and our NBFC partners. Simplify this entire process where it normally takes about 30, 40, 60 days to get credit limits from these banks and NBFCs, reduce the turnaround time to about 3 to 7 days, and give on-demand access to credit to the MSME segment. That's broadly what we did. During this entire process, obviously in the initial days, it wasn't an easy thing for us to do to convince borrowers on one side, and on the other hand, to convince banks and NBFCs that our analytics are really strong to pick out the outliers. We developed this entire value chain, which you see in the form of access to data, streamlining this entire process, and ultimately giving both the borrower and the banks and NBFCs access to data and cash flows. We started off giving export financing as well, wherein the MSME exporters were getting access to LIBOR-linked loans without having any hedging costs, post-shipment of course, but we were able to reduce the credit cycles all the way from 120, 150 days down to 30, 35, 60 days at max. We're pretty much backed by the likes of Axelor, which is Chris Gopalakrishnan and Shibulal's fund, NASCOM. We have WeWork Labs and Tata Capital backing us as well. The story that we started off wasn't really simple, that we just walked into the market, said, look here, we are a digital partner. Why don't we partner with the MSME side? In order to convince the MSME segment, we pretty much traveled across the country, across trade hubs in India, convincing these MSMEs to participate on our platform, to get access to this credit. Initially, a couple of years ago, it was really challenging for us to even get them aboard. But thankfully, through transactions, word of mouth, experiences with the banks, NBFCs, these MSMEs started adopting us. And today, we can proudly say that we cater to over 2,000 MSMEs actively on our platform. Having 2,000 MSMEs may not seem like a lot in the larger scheme of things, but to get to this stage, it took a great deal for us to kind of convince people around, and which is why we have such reputed partners as well with us. We've tried to democratize the entire lending process, and that's where we're at today. And in the current market, I think this is a product that really fits the requirement. Banks plug in their NPA situations using tech. Borrowers get access to cheap and easy credit by not putting up too much in terms of collateral or in terms of high rate of interests. And we partner, bring both sides to meet on a common marketplace. That's what Canopi is all about, and this is what we've done in this entire process. Like I said, a very small, brief presentation from my side. Thanks. We're competitive. We can be at 10%, we could be at 13%, 14% also. So, and we could be LIBOR linked, which is dollar flows, which are single-digit rates of interest. Right. That's it. Thank you.